Welcome back everyone, I hope you're doing well, and in this video, we're discussing a big tech company that has made some major headlines over the past week. This is one of the strongest companies on the planet, and it's a top holding in my personal dividend growth portfolio. And the stock we're going to focus on in this video is Microsoft. And recently, we have received reports that they have won a US Army contract worth $22 billion over the next decade. The company's in talks to buy Discord for a value of $10 billion, and they're also pursuing the acquisition of Nuance for $16 billion, and all this news has come out over the past week. So Microsoft has been really busy as of late, and in this video, we're going to take a look at the company's current operations, go over these recent events, take a look at their financial statements, and the future growth expectations for this big tech giant. But before we do that, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos, and today we're going to do a quick analysis on Microsoft, one of the leading tech companies on the market right now. They currently trade for $255 per share, and on the 1-year chart, they have grown by 55%. And at this current level, they have a market cap of $1.93 trillion and have a dividend yield of 0.88%. And right now, Microsoft is the second largest position in my personal dividend growth portfolio. I own 44 shares with an average cost of $190, and I'm currently up over 34% on my Microsoft position. And this is a company where I'm still tempted to buy more, even as they trade at all-time highs. And at this current share price, the company is still reported to be undervalued according to Simply Wall Street. They have an estimated fair value per share of $263, and the $255 level that we sit at right now is a slight 3% undervalued according to this program, who uses a discounted cash flow analysis. And over the past 5 years, this has been one of the best performing companies on the entire market. And we can see, taking a look at the historical performance, including dividend reinvestment, the total return for Microsoft stock is at 401% over the past 5 years, grossly outperforming the overall market, who only returned a total of 122%. So this company has been a winner, and I believe going forward, they will continue to outperform the broad market for the next 5 to 10 years in the future. And next, we're going to take a look at the major news events surrounding Microsoft that have come out over the past week, starting with the fact that the company has won a US Army contract worth just under $22 billion over the next decade, and the company will deliver more than 120,000 devices based on its HoloLens augmented reality headset. And this is big news. These products are going to be used for training devices and in-action combat for the US Army, and the deal is worth $21.88 billion over the next 10 years as the company continues to build out their prototype headsets for the Army. And this deal comes about a year after Microsoft's previous contract win with the Pentagon worth around $10 billion for a cloud contract. And we can see a little picture of what the headsets will look like once they're delivered to the US Army. And if we take a look now at the second big headline surrounding Microsoft, we have the fact that they're in talks to buy Discord for around $10 billion. And I think this would be a major acquisition, and I think Discord will fit in very nicely to the overall Microsoft ecosystem, which includes all their different software products, their cloud products, and of course LinkedIn, which they purchased for over $20 billion back in 2016. And I think Discord's a growing community. I think it's only going to grow as time goes on. And if you've never used the platform before, it's just a different messaging and group communication platform for different text, video, and audio communication in large groups or smaller personalized conversations as well. And I actually may create a Discord for the channel going forward if my viewers find it very helpful, and where we could have discussions on different stocks like Microsoft or any other company on the market. And I really hope this deal can go through, because I think it'd be a nice acquisition that would fit very well in Microsoft's current business and help the company expand into a new market. And finally, the third big headline as of late is the fact that they're in talks for another major acquisition, which includes buying Nuance for $16 billion. And this deal would help improve Microsoft's development of stronger artificial intelligence. And if you're unfamiliar with Nuance, they're a tech brand that operates within the speech recognition industry. And they drive their revenue by selling tools for recognizing and transcribing speech in doctor's visits, customer service calls, and voicemails. And this technology, if acquired by Microsoft, will help improve their overall development of all their different voice-to-text options operating in their current ecosystem. And I believe voice technology is the future, and I believe over the next decade, everything we do in our lives is going to be activated through voice and speaking. So if this deal can get done, I think it will help Microsoft remain a leader in this fast-growing industry. And now we're going to move on and take a look at the company's latest quarterly report to see how their operations have been performing over the past 90 days. And we can see that their total revenue over the last 3 months came in at $43.1 billion, which was up 17% year over year. They maintain an extremely high gross margin of 67%, and their total net income saw growth of 33% year over year as well, which is absolutely insane, and that came in at $15.5 billion over the last 3 months. This company is a cash cow. Over $15 billion of net income in a 3-month span is absolutely impressive, and the fact that they can grow that by 33% throughout a global pandemic is even more impressive and shows how dominant this tech brand really is. And we can see their LinkedIn revenue grew 23%, and what's extremely important is the growth in their cloud business, which saw total revenue growth over the latest quarter of 50% year over year. And because cloud is the future, maintaining such a high growth rate is actually industry leading. And I think Microsoft going forward is continuing to grow their market share in the cloud space. And also their Xbox content and revenue grew 40% after the release of their newest console in late 2020. And the company also posted some great financial results and is dedicated to returning their capital to their investors every single month. And over the latest quarter, they returned $10 billion to their shareholders. In 3 months, $10 billion was returned through share buybacks and dividends. That was up 18% year over year, with $5.8 billion of share buybacks and $4.2 billion in their quarterly dividend payment. And like I previously mentioned, this company is a cash cow machine. And over the latest quarter, they brought in $8.3 billion of total free cash flow, which was up 17% year over year. And as this total free cash flow continues to grow every single quarter, that means there's more capital for them to pay out in the form of a dividend and to do share buybacks. So at this current point in time, they have a yield of 0.88%, which of course is on the low end, but they grow that payment at close to 10% per year, and they've been doing it for 17 consecutive years while maintaining a very low payout ratio of only 30%. And of course, with such a low payout ratio and such strong financials, they do have the highest dividend safety score possible, coming in at a 99, so it's extremely unlikely that we see any dividend cut coming from Microsoft over the shorter term. So I think this company, when people take a look at the yield, they kind of disregard it as a dividend payer. But although the yield sits around 1%, it's growing at 10% per year, and you have to remember, you're going to get a lot of long-term share price appreciation, plus they return so much capital to their investors through share buybacks every single month, you're getting a total return that is much greater than the late 1% yield that the company currently has. And now if we move on and take a look at their financial statements, I believe Microsoft may have the strongest set of financials on the entire market. Total revenue continues to grow year over year, reaching a record high of $153 billion over the trailing 12 months. And if we take a look at their bottom line, their total profit over the last 12 months is at $51 billion, representing a 33% net profit margin, which is absolutely huge. $51 billion of total income in a 12-month span is absolutely incredible. And going forward, they have no expected signs of slowing down. Total revenue growth in 2021 is projected to come in at $14.8 billion, followed by another 11% growth in 2022. And if we take a look at the company's balance sheet, they are in an extremely strong financial position with total cash of $132 billion. $132 billion of cash sitting on the balance sheet. There's not many companies in the world worth $132 billion, and Microsoft has that sitting there ready for share buybacks, dividends, acquisitions, research and development, or really anything they want. So even if they were to acquire Discord and Nuance, even if they were all cash offers, the company would barely even put a dent in their total cash position. And we can see total current assets of $174 billion versus short-term debt coming in at only 67. And the total debt on this entire company comes in at $173 billion, and overall assets are coming in at $304 billion. And overall, we can see that this company's financial position is extremely strong and their total equity is growing over the long term as well, and that currently sits at $130 billion. And next, we're going to take a look at a few analyst reports to see what Wall Street is saying about Microsoft and the company's future projected growth. So at this current point in time, the company is considered a buy with 16 strong buys, 15 buys, and 4 holds, and no one is selling out of Microsoft. And I actually consider this a strong buy from looking at this chart. And right now, over the past 6 quarters, they have beaten EPS expectations each and every time by high double digits. And their total revenue throughout 2021 is projected to grow by close to 15%, followed by another 12 to 13% in 2022, where they're projected to reach over $182 billion of total sales. And at this current point in time, the company currently trades with around $153 billion of revenue and $51 billion of total income. But over the next 5 years in the future, the total top and bottom line is projected to grow, and by year end 2025, they're forecasted to have $260 billion of total sales and over $90 billion of total revenue, which would be absolutely huge. And I think the company would be worth a lot more than where they're currently sitting. And the forecasted annual earnings growth is coming in at 9.4% over the next 3 years. And if we jump back to Yahoo Finance, for the next 5 years in the future, they have an average analyst rating of close to 17% per year share price appreciation. And right now, the company is considered a strong buy, coming in at a 1.7, and the share price of $255 is nicely below the 12-month expectation of $272 per share. So overall, from the 3 reports, we can get the general consensus that analysts do like Microsoft at this current share price. It is ranked as a buy or a strong buy, and over the next 12 months, we're expecting the share price to continue to grow. And I think this is one of the strongest tech companies in the world, if not the strongest. I think the new acquisitions, if the deals can go through, will be a nice expansion point for the business. They're one of the leaders in the AI and cloud space. And I think going forward, there's not going to be many companies that will compete with Microsoft at the scale they've already achieved. And the fact that this company is continuously devoted to further innovation and research and development, I don't think anything's going to slow them down from further growth. And although people say they are trading at around $2 trillion market cap, how much further can this company grow? But I think over the long term, if they can achieve that $250, $300 billion of total sales, I absolutely believe this company can be worth $2.5, $3 trillion over the next 5 to 10 years. So I think there's still some upside, and who knows, Microsoft may continue to grow past that for many years to come. So we'll see how this company plays out. I still think at this current point in time, they're a big tech leader that's going to grow going forward. They still have a lot of upside. And even as they trade at all-time highs, I think there's never a bad time to add to a position in Microsoft or start one if you haven't done so already. Those are just my personal thoughts on the company. Of course, this is not financial advice. I'm not a financial advisor, so make sure you do your own research. This is just my personal opinion on the company. We went over some of their news headlines, and I actually own this company in my own portfolio. Like I mentioned, it is the second largest holding, and my current position is worth over $11,000. And now we're going to wrap it up. Thank you for watching to the end. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news, and that's what we focused on in this video. The news surrounding Microsoft, of the major US Army contract, and the potential acquisitions. So please hit that like button, subscribe if you already haven't done so, and I will see you in tomorrow's episode.